Every time you swipe your card, a label gets attached to your purchase. You do not see it, you do not approve it, you do not even know it exists, but that label decides everything. When you tap your card at a coffee shop, your bank does not just see $10 spent. It sees a category, it sees a code. It sees a merchant classification that tells the system exactly what kind of business you are supporting. And that code travels with the transaction like a digital fingerprint. It is called a merchant category code. 4 numbers, 4 invisible digits that quietly describe your behavior. Groceries have a code, gas stations have a code, airlines have a code, pharmacies have a code. Gambling sites have a code, gun stores have a code, crypto exchanges have a code, every business you interact with is labeled, and when you pay, you inherit that label. Now here is where it gets uncomfortable. Banks do not just use these codes for accounting. They use them for filtering. They use them for monitoring. They use them for compliance. They use them for risk scoring. And sometimes they use them to decide what you are allowed to buy. Let that sink in. Not how much you spend, what you spend it on. Because when your transaction moves through the system, it does not just go from your account to the merchant. It passes through networks, Visa, MasterCard, processors, fraud detection layers, compliance filters. Each layer reads the code. Each layer evaluates the category. Each layer can stop it. You might think your money is neutral, but the system does not see neutrality. It sees patterns. It sees behavior clusters. It sees risk. It sees compliance exposure. And sometimes it sees something it does not like. In 2022, major payment networks announced new merchant category codes specifically for firearm retailers. The justification was simple: tracking, monitoring, preventing suspicious activity. On the surface, it sounded administrative, but the implication was enormous, because once something has its own category code, it can be isolated, and once it can be isolated, it can be restricted. You may not notice it at first. Nothing changes overnight. Your transactions still go through, but now the system can identify them instantly. It can flag them faster. It can aggregate them. It can treat them differently. And this does not only apply to firearms. Think about gambling. Certain banks already block transactions to online betting sites, not because you are over your limit, not because you lack funds, but because the category itself is restricted. Think about cryptocurrency purchases. Many people have had their cards declined while trying to buy digital assets. The system simply says no, no explanation, no negotiation, because the merchant code triggered a rule. You are not out of money, you are out of permission. And that is the shift most people do not understand. We are moving from a balance-based system to a behavior-based system. In the old model, the only question was simple: do you have the funds? In the new model, the question becomes different. Is this purchase acceptable? That difference changes everything. Because acceptable is subjective. Acceptable evolves. Acceptable depends on policy. Acceptable depends on pressure. Acceptable depends on risk frameworks. Acceptable depends on who defines the rules. And you are not the one defining them. You may think you are choosing freely, but the merchant code attached to your purchase is quietly feeding into a decision engine you will never see. And once the engine can identify what you are buying, it can decide what should not be allowed. This is not conspiracy. It is infrastructure. And infrastructure does not need headlines to change behavior. It just needs code, 4 digits. That is all it takes. Once your purchase receives a merchant code, it enters a second system, a system that does not care about you as a person. It cares about you as a pattern. It cares about you as data. It cares about you as a probability. Every transaction you make is fed into automated risk engines. These engines do not ask why you bought something. They ask what your behavior looks like compared to millions of other people. They compare you to models. They compare you to profiles. They compare you to historical risk cases. And merchant codes are one of their favorite inputs, because codes simplify reality. They turn complex human decisions into neat categories. And computers love categories. When you buy groceries, the system logs essential spending. When you buy fuel, it logs mobility. When you book flights, it logs travel. When you buy crypto, it logs financial speculation. When you visit certain sites, it logs high risk. Each category adds weight to your profile. Each category changes your risk score, and you never see that score. Banks rarely admit it exists, but it does. It is constantly recalculated. It changes every day, sometimes every hour, and merchant codes help shape it. Imagine 2 people with the same income, the same credit limit, the same savings. On paper, they look identical, but their spending patterns are different. One buys groceries, pays rent, saves money. The other spends heavily on gambling sites, crypto platforms, and overseas services. The system does not see personality. It sees risk clusters. It sees correlation. It sees historical outcomes. And it learns. Over time, it builds a profile of who you are financially, not based on your intentions, based on your categories. And once that profile exists, it starts influencing decisions, credit approvals, transaction limits, fraud sensitivity, manual reviews, account monitoring. The more sensitive categories you touch, the more attention you attract. Not because you did something illegal, because your pattern looks statistically unstable. In banking, instability equals danger, and danger equals restrictions. This is why some people experience random card declines. They have money, they are within limits, they did nothing wrong, but their profile triggered a rule. The system decided the transaction was out of character, or high exposure, or policy sensitive. So it stopped it, automatically. No human involved, no conversation, no warning, just denial. And merchant codes make this possible, because without categories, behavior is messy. With categories, behavior becomes manageable. Let us take an example. You travel abroad. You make several purchases. Restaurants, hotels, transportation, normal. But suddenly, you make a large purchase at a classified merchant, a crypto exchange, a betting platform, a high-risk service provider. Now your profile changes. Not dramatically. Subtly, your risk score shifts. Your monitoring level increases. Your future transactions get watched more closely. You never receive a notification. But behind the scenes, you have moved into a different tier. And once you are in that tier, the rules are different. Lower tolerance, faster freezes, more reviews, stricter filters. Now combine this with machine learning. Modern banking systems are trained on past crises, fraud waves, money laundering cases, sanctions violations, regulatory penalties. Every scandal teaches the system what to fear, and merchant codes are used to recreate those patterns. So if certain categories were linked to past problems, the system treats them as threats. Even if you personally did nothing wrong, you inherit the risk of the category. That is the key. You do not get judged alone. You get judged as part of a group, a statistical cluster, a behavioral segment, a probability model. Your individuality disappears. You become a data point, and data points are easy to control. This is why banks love automation. It scales judgment. It scales compliance. It scales enforcement. One rule can affect millions. One update can reshape behavior. One code change can redirect entire industries. And it happens quietly. No vote, no debate, no announcement. Just software updates. Merchant codes do not exist in isolation. They are connected to regulators. They are connected to governments. They are connected to compliance agencies. They are connected to political priorities. And once money flows through those connections, it becomes controllable. Every major bank operates under thousands of regulations, anti-money laundering laws, sanctions rules, counter-terror financing policies, tax reporting requirements, consumer protection mandates. On paper, these rules exist to stop crime. In reality, they also create centralized leverage. Because when banks are punished, they change behavior fast. Fines reach into the billions. Executives lose jobs. Licenses get threatened. So banks do what regulators want, not because they agree, because they must survive. And regulators do not control every individual transaction. They control categories. They control risk frameworks. They control definitions. They tell banks, watch this sector. Limit this activity. Monitor these merchants. Restrict these flows. And merchant codes make those instructions executable. If regulators worry about crypto, codes are tightened. If they worry about online betting, codes are restricted. If they worry about foreign platforms, filters are added. No laws need to change. No public debate happens. The system just updates, and suddenly millions of people feel it. Their cards fail. Their payments get blocked. Their accounts get reviewed. Their access shrinks. They are told it is for security. They are told it is for compliance. They are told it is for your protection. But the real reason is alignment. Banks must align with power, because misalignment is expensive. Now look at what happens during crises, during pandemics, during wars, during financial panics, during political instability. Governments issue guidance, banks adjust systems, codes get reclassified, limits get changed, categories get redefined overnight. This is why during emergencies, certain purchases suddenly become difficult. Certain transfers stop working, certain platforms lose access. Not because of technical problems, because priorities changed and the software followed. This is programmable finance, not in theory. In practice, money that can be directed, money that can be discouraged, money that can be slowed, money that can be frozen, all without touching your physical cash, because there is no physical cash. It is all digital, it is all permissioned, it is all mediated. Now consider corporations, payment networks, Visa, MasterCard processors, gateways, clearinghouses. They also influence codes. They also influence policies. They also enforce standards. If they decide a sector is unacceptable, it disappears from mainstream payments. Entire industries have been cut off this way, not by law, by policy, by network rules, by terms of service, and once you are excluded from the network, you are invisible. You cannot scale, you cannot operate normally, you become fringe. This is financial soft power. No soldiers, no courts, no prisons, just switches. Now imagine this system becoming more precise, more automated, more intelligent, with artificial intelligence, with predictive modeling, with behavioral scoring, with social signals. The infrastructure already exists, the data already flows, the incentives already align, and merchant codes are the skeleton. They hold everything together. They translate human activity into machine language. They turn life into spreadsheets. They turn choices into flags. They turn freedom into parameters. This does not mean every restriction is evil. Some prevent real harm, some stop real crime. But the danger is not today. The danger is capability. Once a system can control behavior, it will eventually be used. History shows this every time. Tools created for safety become tools of influence, tools created for order become tools of pressure, and tools created for efficiency become tools of dominance. The question is not whether this system will be abused. The question is when, and by whom, and under what excuse. Because when your money depends on approval, your life depends on permission. And when permission becomes invisible, resistance becomes difficult. So the next time your card works, remember, it worked because it was allowed, not because it was yours. And that is the real meaning of modern money. If this video helped you see the hidden structure behind everyday spending, make sure you subscribe. Because once you understand how these systems work, you stop being surprised by them, and you start protecting yourself.